Kimberly-Clark, it's a company whose products are household names around the world. Well, today we are joined by Chairman of Kimberly-Clark Mexico to talk about the business climate in that country and how it has been impacted by, of course, events in Europe, as well as the economic slowdown here in the U.S. Claudio Gonzalez has more than 50 years of experience working at the biggest multinational corporations. He sits on the board of several well-known Mexican companies. He's also the Director Emeritus of General Electric. Welcome to Street Smart, Claudio. It is wonderful to have you here while you're in town. Let's start right away with the business climate in Mexico. You and I were just talking about the economy in Mexico. Certainly of Latin American countries, it really does shine as having been able to keep inflation in check while having fairly strong growth and also keeping unemployment extraordinarily low in times like these.
Well, we have a great paradox, Lisa, in Mexico, because in spite of the security situation that so many people hear about, the economy is growing very well, and our economic indicators, as you point out, are very solid, and the growth prospects of the country are good. Stars are aligning and making us more competitive, and we should be able to continue to grow. We have a worry that the U.S. doesn't fall back into a double dip. If the U.S. continues to grow, we will be fine. But it's important that for the whole world that the U.S. continue to grow.
Now, you mentioned the security issues in Mexico, and it's starting to get a lot more attention. Certainly has even been something they've talked about during the presidential campaigning, how much of a budget would be dedicated to security within Mexico as it relates to a lot of the sort of internal terrorism, is what I'll call it, that's happening there. I want to bring up some statistics just to give it some context. And this comes from a Wharton study that relied on some estimates from Kroll, another ratings agency, saying that the cost of the drug war and security just internally or domestically within Mexico is equivalent to 8% of the country's GDP, and that's 75% of tax receipts, right? Sales and income tax there, and it's 3.5 times the amount of the direct foreign investment into Mexico, which is quite high, and it's 2 times the size of oil exports out of Mexico. Wow. And those are astounding numbers. How does a business manage to grow in that environment? How at Kimberly-Clark is that impacting you, or does it?
Well, I don't know where they got their numbers because, you know, these businesses, these crime-related activities, who can measure them? So I don't know where they got their numbers, but it is big and it is an issue, and we're having to face it, and we are facing it. Now, as far as our company is concerned, it is not an issue, fortunately. And some of the areas, because this is mostly a regional issue, the areas where the crime rates are higher, they're not affecting our sales. So it's again a big paradox, as I pointed out, but we've got to lift our institutional capability to deal with it, and we are starting to lift our institutional capability to deal with the crime-related activities.
Does it have any impact on your bottom line?
No, it doesn't.
And then let's talk about, that was a definitive answer there, it doesn't. I want to talk about events in Europe, something that we have been talking about every single day here in the U.S. How is that impacting business in Mexico? In fact, a number of people have looked to the emerging markets that are somewhat insulated and have strong domestic demand as almost a safe haven in times like these.
Well, Europe, you know, represents 20 to 25% of the world's GNP. So if Europe drops off, it's going to affect the world. Our principal concern is how much it affects the United States, because if it affects the United States, it's going to affect us. So that's the principal concern that we have. It's already affected us in the value of our peso, because the uncertainty has dropped of the value of most currencies in the emerging market world, and so we have to deal with it, and we'd like to see Europe get its house in order. I think the whole world would like to see that happen.
What are your biggest challenges now? I was looking through a number of analyst reports. Of course, there's Kimberly-Clark here in the U.S. They own 48% of Kimberly-Clark Mexico, which is listed, of course, on the Mexico exchange. Zero buys on the stock. Yet it hasn't done particularly poorly relative to the broader market in Mexico.
That's correct.
Certainly has outperformed, but it is down for the year. What are the analysts missing here?
No.
If they're missing anything?
No, I think we're a very good stock to own all the time, but particularly in rough times. Why? Because many of our products are required, whether you are in good times or not so good times. And so that's the issue that we present, and it's a positive story, because, as I say, we may not jump up when times are good, but we don't drop off when times are not so good. And that's why we can be so valuable at all times.
All right, Claudio, we have to leave it there. We do appreciate you joining us here on Street Smart. Great to have you in town. Of course, look forward to seeing you once again, and safe travels back home.
Thank you very much for having me.
It was Claudio Gonzalez, chairman of Kimberly-Clark, Mexico. I mentioned a moment ago, just to clarify, it is 40% owned by the U.S.-based Kimberly-Clark, but of course trades under its own ticker in Mexico.